Hello everyone, welcome back to my channel. Today, we're diving deep into a book that could completely transform your financial future, The Simple Path to Wealth by J.L. Collins. Whether you're a complete beginner when it comes to personal finance or someone who's been investing for years, this book offers a refreshingly simple, yet incredibly powerful, approach to achieving financial freedom. J.L. Collins wrote The Simple Path to Wealth as a letter to his daughter, but its impact has gone far beyond that. He wanted to ensure his daughter understood how to manage her money, and he realized that many others could benefit from the same advice. What he created wasn't just a guide for his daughter, but a complete financial blueprint for anyone who wants to live a life free from money stress. His philosophy is that money doesn't have to be complicated, and if you understand a few key principles, you can set yourself up for lifelong financial success. Collins starts by sharing his personal journey. Like many young people, when he first started working, he didn't know much about money management. He was excited to get his first paycheck and, even more so, his first credit card. That little piece of plastic felt like the key to a whole new world of possibilities: dinners out, new clothes, vacations, you name it. But soon, he found himself staring at a $3,000 balance, with only $100 required as a minimum payment. It seemed too good to be true. And, of course, it was. He quickly realized that this credit card wasn't free money, and paying off the debt would take much more effort than he expected. This experience marked the beginning of his financial education. He learned firsthand that debt is a trap designed to keep people spending money they don't have. Credit card companies and lenders make it easy to live beyond your means, but the cost is steep. Collins realized that being financially successful isn't about how much you earn, but how much you keep. And the more debt you have, the harder it is to build real wealth. This early mistake motivated Collins to dig deep into the world of personal finance, and eventually, he developed a strategy that allowed him to achieve financial independence and live life on his own terms. In The Simple Path to Wealth, Collins emphasizes the importance of avoiding debt. He explains that debt is the single biggest obstacle to achieving financial freedom. When you're in debt, you're essentially working for someone else, the bank, the credit card company, or whoever holds your loan. Every paycheck you earn is already spoken for, before it even hits your bank account. The interest on your debt keeps you in a cycle where it feels impossible to get ahead. Collins describes debt as a financial prison, one that keeps people from living the lives they truly want. Whether it's credit card debt, student loans, or a mortgage that's too large, debt can prevent you from ever experiencing true freedom. Collins' solution to this is simple: live below your means and pay off your debts as quickly as possible. This doesn't mean you have to live a life of deprivation. Instead, it's about being mindful of where your money is going and making conscious decisions about how you spend it. He encourages readers to avoid lifestyle inflation, the tendency to spend more as you earn more. Many people think that making more money will solve their financial problems, but if you continue to increase your spending as your income rises, you'll never actually get ahead. True financial success comes from saving and investing as much as you can, not from earning more and spending more. The book highlights two distinct phases of financial independence: wealth accumulation and wealth preservation. These phases are key to understanding how you can build and maintain financial security throughout your life. The wealth accumulation phase is all about building your financial base. This is the stage of your life where you're focused on earning, saving, and investing as much as possible. During this phase, it's essential to live below your means and invest your savings wisely. Collins advises that the majority of your investments should be in low-cost index funds, particularly the Vanguard Total Stock Market Index Fund, VTSAX. He chose this fund because it gives you broad exposure to the entire U.S. stock market, which means your money is spread across many companies and industries. This diversification helps to protect your investment while allowing it to grow over time. Collins explains that the stock market, over the long term, has always gone up. While there are inevitable ups and downs in the short term, those who stay invested during downturns and don't panic are the ones who come out ahead. He recounts how many people lost large sums of money during the 2008 financial crisis because they panicked and sold their investments at a loss. However, those who held on and continued to invest during the downturn saw their portfolios recover and grow even stronger when the market rebounded. The lesson here is that patience and discipline are critical when investing in the stock market. During the wealth accumulation phase, Collins emphasizes that your most important job is to stay the course. Don't be tempted to try to time the market or pick individual stocks. Research shows that even professional investors struggle to beat the market consistently, so as an individual investor, your best bet is to invest in a broad index fund and leave your money there. Over time, the power of compound interest will work in your favor, and your investments will grow significantly. Once you've accumulated enough wealth to support your lifestyle, the focus shifts to wealth preservation. This phase is all about ensuring that your money lasts for the rest of your life. Collins explains that when you've reached financial independence, you can start drawing from your investments to cover your living expenses. However, it's important to withdraw only a small percentage each year, typically around 4%, to ensure that your portfolio continues to grow over time. Collins refers to this as the 4% rule, which is a widely accepted rule of thumb in the financial independence community. The idea is that if you withdraw 4% of your portfolio each year, your money will last indefinitely, as long as the stock market continues to grow at its historical average rate. This approach allows you to maintain your financial independence without worrying about running out of money. One of the most powerful concepts in the simple path to wealth is the idea of foo money. Foo money refers to the savings you've accumulated that give you the freedom to walk away from situations you don't want to be in, whether it's a toxic job, a bad relationship, or any other circumstance that makes you unhappy. Foo money is about having the financial freedom to make decisions based on what's best for you, rather than what you can afford. Collins shares a personal story about foo money from his own life. He once worked for a company where his boss refused to give him a 6-week unpaid leave to travel in Europe. At the time, Collins had saved enough money that he didn't need the job, so he quit and took the trip anyway. This experience taught him the value of foo money, and he encourages readers to accumulate their own foo money as soon as possible. It doesn't have to be enough to retire on, just enough to give you the freedom to walk away from a bad situation if necessary. Collins also talks about the importance of changing your mindset around money. Many people see money as something to be spent, but Collins encourages readers to view it as a tool for building more wealth. Every dollar you save and invest has the potential to grow exponentially over time, thanks to the power of compound interest. For example, if you invest $1,000 today and it grows at an average rate of 7% per year, that $1,000 will double in about 10 years, and continue doubling every decade after that. This is why it's so important to start investing as early as possible. The longer your money has to grow, the more wealth you'll accumulate over time. Collins also introduces the concept of opportunity cost, which is the idea that every time you spend money on something, you're giving up the opportunity to invest that money and let it grow. For example, if you spend $20,000 on a new car, you're not just giving up that $20,000, you're also giving up the potential future earnings that money could have generated if you had invested it. Over time, that $20,000 could have grown to a much larger sum, but by spending it on a car, you've lost the opportunity to let it grow. This mindset shift is crucial for building long-term wealth. Collins also touches on the psychological aspect of investing. He acknowledges that it can be difficult to stay calm during market downturns, especially when you see your portfolio losing value. However, he emphasizes that staying the course and continuing to invest during these times is the best strategy. He encourages readers to ignore the short-term noise and focus on the long-term growth of the market. The stock market has always recovered from downturns, and those who stay invested are the ones who benefit the most from the recovery. Another key takeaway from the simple path to wealth is the importance of simplicity in your financial life. Collins argues that many people make personal finance more complicated than it needs to be. They try to pick individual stocks, time the market, or chase after the latest investment trends. But in reality, the most effective way to build wealth is to keep things simple. Invest in low-cost index funds, live below your means, avoid debt, and let time and compound interest do the rest. Collins also stresses the importance of being patient. Building wealth takes time, and there are no shortcuts. It's easy to get discouraged when you're just starting out, especially if it feels like your progress is slow. But Collins reminds readers that financial independence is a marathon, not a sprint. The key is to stay consistent, stick to your plan, and trust that your efforts will pay off in the long run. In the end, the simple path to wealth is about more than just money, it's about freedom. Financial independence isn't just about having enough money to retire, it's about having the freedom to live life on your own terms. It's about being able to make decisions based on what you want, rather than what you can afford. Whether that means quitting a job you hate, traveling the world, or simply spending more time with your family, financial independence gives you the freedom to do what makes you happy. Thank you for joining me on this deep dive into J.L. Collins' The Simple Path to Wealth. I hope this summary has provided you with valuable insights into how you can start building your own path to financial freedom. Don't forget to like, subscribe, and hit that notification bell so you never miss a new summary from Book Bank Summaries. Let me know in the comments what your biggest takeaway from this book was, and if there's another book you'd like me to cover next. Until next time, stay wise, and keep reading.